This is my review of the fourth and final week of February 2025. I'm going to take a look at what the market did in that week and what my own trading activity was like during the week. Now, I'm recording this very late, and so the new week has already opened. I'm recording this Sunday night, essentially early hours of Monday morning, and we can see that this blue candle over here is the new week candle that has just started printing. So we'll ignore that. The candle in focus is this bearish candle that we see that printed on the euro dollar. Let's see what sort of candle printed on the pound. Similar situation, bearish candle with a long wick to the upside. Similar candle as the euro candle. So you can see that the dollar traded bullishly. I went into this week with a bullish bias. I ended up having three trade ideas, but psychological errors that were occasioned by the seven trade losing streak that I had from the previous week led me to make certain mistakes that ended up significantly, essentially annihilating all the profits that I would have made during the week. And I'm going to go into them. So I had three trade ideas. One of them was a loss, and the other two were wins. And incidentally, all my trading was done by Wednesday. So I had a trade Monday, which was supposed to be a win. I had a trade Tuesday, which was the loss. And I had a trade Wednesday, which was a win. I opened six different positions on my different accounts. So I traded them a bit differently. So I opened six positions when I should have only opened three. And I ended up taking more losses on the one trade that should have been a loss. I ended up taking three losses on that trade idea instead of just a singular loss. I found myself revenge trading. And then on the first win, instead of me to leave the trade, let it play out, I fiddled with it a bit. So I got stopped out when I should not have. And I ended up re entering on a different pair for a 1 hour win. So essentially, it was a break even trade idea. Now, I started this week bullish, and for the simple reason that we can see the previous week. So, this high had been printed since the 27th of January. You can see if we extend this, you can see that it forms relatively equal highs with this high that was formed on 16th December. If you go down to the daily, you see it a bit more clearly. Now, this high was posted, price traded lower, traded to the upside. Then one of the previous weeks that we had traded very, very close to this high. So you'd expect for this high to be taken out. Then you can see that the week before last did something similar, traded to the downside, had this rejection week to the upside. So all of this would give you the impression that this high was going to be targeted and taken out. So I was expecting price to trade here. And look at what it did during the week. Traded very close to it, but did not take it and then reversed. That, as you would imagine, tripped me up a little bit in the market. And so let's take a look at the actual trade ideas. So trade ideas were a buy on Monday on Euro USD, a sell, no, a buy on Monday on GBP USD, a sell on Tuesday on both Euro and GBP USD, and then a buy on Wednesday on GBP USD. Let me make sure I have that correct. No, a buy on Wednesday on Euro USD. Yeah, on Euro USD. Okay, so GBP USD buy Monday, Euro and GBP USD sell Tuesday, Euro USD buy on Wednesday. So these are the trades. Let me go to the GBP USD trade, which was the first trade that I took, which was supposed to be a win. This was the trade. Now, this trade was purely based on liquidity. On the 4 hour time frame, this is what I was looking at. So on the 4 hour time frame, remember I mentioned that I was expecting price to take out those equal highs. And so there was a corresponding low on the euro dollar here at this point in time. Now price had already taken out the high on the pound, but because I was still anticipating that to happen on the euro, what happened was that euro was actually stronger. Euro did not take out this Friday 21st February 4 hourly low, and so euro was stronger on that day. But because my trading relies on liquidity sweeps and euro did not sweep that liquidity, I was only able to execute the trade on the pound dollar. So I had an alert set here. After, you see this move, price does this, pushes up again. I'm just waiting for price to take this lower out and then to give me a reaction to the upside. So on Monday, when this low got taken out, and you can see that it created relatively equal lows right before sweeping that liquidity. I like to see that. Now, if you look at this, is the same bit of price action. You can see what happened here. This low was created, then price came very close to it, didn't take it out. That's for a reason. And then during London, price came very close to it as well, did not take it out. And then during New York, this is what we see. New York traded below it, took out London low, took out the previous day's New York low as well. And then at that point, when that happens, all I'm looking for is a rejection candle. So either an engulfing candle, of course. If we were waiting for this candle to be engulfed, the move would have essentially played out. So this rejection candle in the form of this hammer candle, price took out the previous candle's low, traded bearishly, but then was unable to close bearishly. It's still a bearish candle, black candle, but it closed in the first, third of the candle. So this is a bullish sign. So there's about a 6 pip stop loss. I took this trade. Stop goes below the low, and this trade essentially played out for what should be a 5 hour, but of course I don't target 5 hour, I target 3 hour. Now I still ended up having to exit this trade somewhere around here for a 3 hour trade because my execution wasn't perfect. You can see that the candle that followed traded aggressively to the upside, so I think I got a fill. Yeah, I got filled somewhere around here. Now if we take a look at this trade, we can see that what happened was after price, immediately after I entered, pushed aggressively in my favor, it started doing this, started coming back down, and we can see on the 15-minute time frame that this particular candle gave the impression that price was going to resume the bullish move from here. You can see if I just move that out of the way, you can see that the candle had a wick to the downside and then closed, towards the middle of the candle. So while I was in drawdown and I was anxious, I needed this trade to play out. What I ended up doing was I moved my stop here. I took another position. I aggressively pyramided into the entry, which is a pitfall I had actually identified for last month. So it really sucks that I did this again in this month. Well, now of all the pitfalls I identified the previous month, I think this is the only one I repeated. So I'm happy about that. But you can see I put my stop here, then took another position with that stop here. And then so when this candle opened and traded here, I got taken out of both positions. Of course, if I had just done that same thing using this candle, it would have worked out. But the principle is that that's not the sort of thing you want to do. You don't want to be messing about with your trade, especially when it's in drawdown, adjusting your stops, because the logical point of invalidation for this trade was this low, and that was never met. Now, admittedly, I did not mess about with this trade on one of my other accounts, on the challenge account that I'm facing, but on my personal accounts that I trade, I actually messed with it, and so it cost me real money. Now, when I took this loss here and then price printed this candle, the corresponding candle, remember I mentioned that euro was much stronger on that day, and so because of that, the corresponding candle on the euro was this candle right here. Now, so you see, this is it. Price, this would have been the entry on the euro. When price printed this candle, you can see here I re-entered because my bias was still correct, and I put my stop below this low. But at this point I could only target about a 1 hour because it had already moved significantly to the target. If I were to take that trade on the euro from the start, this is where my entry would have been. So since I did not get that entry and I had to enter here, I could only take about a 1.5 hour out of the trade. And so that was Monday's trade. Now Tuesday is where most of the damage was done to me. Now we can see that although Monday did trade and you delivered the 3 hour trade, it did not continue the move to the upside to take out these previous highs that I had anticipated. You can see that shortly after London close, price collapsed again. This created this 4 hour fair value gap that we can see over here. If I just go up to the 4 hour, we'll see the fair value gap printed in price. So this was that 4 hour fair value gap. Now we can see that very similarly to the previous trade that I had taken, which resulted in a win, there were relative equal lows sitting just below the fair value gap. That's the sort of thing that you want to see. You want to see liquidity swept into your area of interest. And so this was New York high from the previous day. Price came very close to that New York high, did not take it out. That's a good sign as well. Now, of course, there was Asia, but this was much below it. And so it was the previous day's New York high, equal highs that I was using to time this trade. Price traded. Now, the thing is, remember, I am bullish, but I thought that now, if I just, the reason that I was willing to go bearish here from that 4 hour fair value gap was that, excuse me, was that since price refused to keep trading higher on Monday, this daily fair value gap has been sitting below price for a while. So I thought, hey, you know what? Maybe price is looking to trade a little lower to take this low out before continuing the move, especially since it was unable to sustain the bullishness that happened on Monday afternoon. So when you're expecting this low to be taken out, and for this 4 hour candle, this was the 4 hour candle that I traded that made me all the 3 hour profits. You're expecting for this 4 hour candle to continue that bullish momentum all the way to the top, but that does not happen. And you see that following that, price does this, and this, and then it has now left a 4 hour fair value gap. What you're thinking is that price is going to come up, trade into the 4 hour fair value gap, and then continue to go lower to take out this liquidity before eventually continuing to the upside. So there was some reasonable logic behind it. Oh, an alert has just been hit that I thought was going to be hit before during London. Anyway, we'll take a look at that and see. So price, essentially, I was expecting price to trade into this 4 hour fair value gap, then trade lower, but we can see what happened here. Massive bullish candle that just perfectly closed it in. But it did not do that without giving me an entry and an opportunity for the market to take money from me. Now, I really hated the way I traded this because, and understandably, so this was what happened, right? Remember, I had just messed up the previous day. Now, I came into this trade. This was the initial trade idea. As soon as price traded into it, this candle printed right at the start of New York kill zone. So first candle of New York kill zone, I went into it with a short right here, expecting price to trade lower to the downside. And immediately on the next candle, you can see what happened was that it took me out. Now, as this candle was printing, at some point, although this candle closed like this, at some point, this candle was somewhere here, right? And it did not take out this previous candle's high. So this candle looked like it was going to trade lower. And so I entered the second position immediately with my stop still at this high. So I ended up losing 2R to this same stop loss, which really sucked. Now, eventually, what happened was that you can see this engulfing candle printed. And so I thought, this is the real move. Now, I did not take this trade on the pound because the engulfing candle on the euro was much more prominent. So I ended up leaving the pound since I was saying, pound does not want to give me the entry. And so this was the candle. Now, if I were looking at the euro all along and not at the pound, you see that first candle, this candle that printed at the start of New York kill zone, would not have triggered me into the trade because this is a massive bullish candle. So if I were looking at the euro all along, I would only have taken this one loss. Now, the trade idea still ended up losing, but if I were respecting my rules of only taking one trade per trade idea, then the first loss on the pound should have been the only one I took, even if after giving this euro entry, price continued to trade to the downside. Those are parts of the that's part of the, what do we call it, the vagaries of sticking to your rules, sticking to your plans. If your entry signal does not play out, then even if that trade eventually plays out by some other means, it was not a trade that you were supposed to profit on. So I ended up taking 3 losses, which was 2 more than I should have taken on the um, on the euro and the pound on Tuesday. My final trade was this Wednesday trade, and that was the only day on which I traded perfectly, didn't mess around with the trade, didn't touch it. And although it went to the full 3 hour, I think I only took about 2.2 hour out of it, because where my TP was, I ended up closing out before price got there. So my TP was initially this high, like I had mentioned, and if I decided to hold until this point, look what would have happened to me. We can see it. So somewhere in the evening, when price was, let's say, somewhere around here, I just looked at the chart and saw that price had taken this high out and was nearing this point. And it was in the evening, volatility was already dying down. So I just decided to close it. But it was a 3 hour trade. I just don't think I closed for the full 3 hour, at least not on all my accounts. But what's the trade idea? Similar, 4 hour fair value gap. If you take a look at it, we'll be able to see it. So when price, the previous day having kicked my ass, not letting me make any money, for example, from this 4 hour bearish fair value gap, after completely inverting it, it created this 4 hour bullish fair value gap. So I'm like, okay, if price does not want to go lower like I thought and is resuming the bullishness from here, no problem. I'll jump back on the bullish train. And what do we see? Price exactly like I wanted to see. This was the liquidity from the previous day that created it. And then during Asia, similar thing, created a low, just sitting on top of it. That's what I want to see. So price took out, this low, took out this low, and then look at this candle immediately after trading into it, completely reversed it. Now, it's technically not a full engulfing candle, but when the range is 12 pips instantly, you can already see the intention. And on the 30 minutes, this was a hammer candle. So immediately that candle printed, I went long here, put my stop here, and you can see that for a while after, price was just dancing around. Now, unlike what I did on Monday, I did not mess about with it. Came here, traded back up, went back down, came very close to my stop, left it, let it do its thing, and then it eventually played out and rewarded me. And so I took about 2 hour, or let's say 3 hour on this trade, minus 3 hour the previous day, and then 1 hour on Monday. So it was essentially a break even slash 1 hour week for me. And what do you know? Price still did not take out this high, did not take it out on the euro, and then on the pound, similar situation. So this was what the pound did. Now the pound, this was that trade, played out, gave way more than what euro gave. But you can see that the entry, there was no liquidity sweep. This is liquidity I would have loved to see swept. That did not happen. And so that's how I traded for the fourth and final week of February 2025. This leaves me about -2 or -3 hour on the month. No, break even on the month, actually.